What's up, guys? Thomas Feng with Bay Area Connect. Today we're doing another video, and we're starting a series about what a loan agent actually looks for after they get your loan application. Today I'm joined again by Celeste Martino of WesternBancorp. So she's going to be helping us understand really what a loan agent looks at. So Celeste, let's start with what a lender does like immediately, right when they get the loan application.
Well, I think the best thing to do is actually meet with the client face to face, go over the loan application if it's been filled out prior to your meeting, and find out what the client's overall goals are, which we've talked about before. We want to know, if they plan on buying a house, they're going to stay in for 10 years or, 2 years. And then the next thing would be to pull a credit report.
Right. So it sounds like the first step is definitely getting a consultation, really understanding what the buyer is looking for in terms of a loan size, loan packages, things like that. The second step is immediately pulling the credit. A lot of first-time home buyers, they try to pull their own credit before going to a loan agency
online.
Right, exactly.
Yeah.
What are some drawbacks of that they actually don't know about?
Well, there's not a drawback. The only drawback for purchasing a home is that the most stringent credit report that you could ever pull is a mortgage company.
Right.
So it's very different when you go to purchase a car. They have their own requirements and means. So you can qualify much easier for purchase of a car than you can a home. So the true credit score, which is your middle score, and that's what they use, really gets pulled from a mortgage company.
Right. Okay. So it sounds like the mortgage guidelines are a lot stricter. So pulling the credit report on your own definitely gives you some good ideas of where you're at.
Right.
But
exactly.
when applying for a loan, it's probably not that useful.
Right.
Awesome. So let's talk about the credit score then. Can you give us some myths and facts about the credit score?
Yeah, there's quite a few things. What makes up your credit score, and that's important because most people don't know what that is. It's kind of a secret, if you will. But 35% of your score is made up of payment history. So if you have a credit card and you've had it for some length of time, it's good to use it every now and then, even if the interest rate's high, but pay it off, even if it's for $5, because that length of time really strengthens your credit score. The next percentage is 30%, and that is amounts owed. So that means everything that you owe in totality.
I see.
Is 30% of your score. And then 15% of your score is length of your credit history. And sometimes first-time buyers don't have much of a credit history. And there's things that you can do to help them with that. The next thing is new credit. So if you apply for new credit several times over, it will ding your credit score. Revolving debt, not mortgages. It's illegal for your credit score to get dinged because you're pulled it more than once or several times in the course of the last year while you were going to purchase a home. So that's a myth. And then types of credit used. Again, how is it for a car? Is it for a student loan? Is it for a mortgage? How many mortgages? And that's 10% of your score.
So all those factors will help build the credit score. After a buyer sees their credit report, what are the main things they should be looking at, paying attention to?
I think a good loan officer would go through the credit report with the client. Again, look it over, make sure it's accurate, because sometimes there's things on there that you don't know. Right. And you get surprised at the time of going to make the purchase, and it could affect your ability to purchase. And you need to look at something simple as if you have a revolving debt, and let's just say it's a Nordstrom's credit card, and your limit is $1,000, and then your highest balance is listed as $500, and then your current, and they want to know what your payment is. So it's so important that you pay down that particular revolving debt 33% of your overall limit. Right. That's where it will help impact your score positively. If you owe more than that, it'll affect it negatively. Also, you have to make sure that revolving debt companies like Nordstrom's or Macy's, so on and so forth, make sure that they report your limit to the Bureau, because sometimes you see that what the current balance is, and then the highest balance, but there's no limit that's recorded, that will hurt your credit score. It's something that simple.
I see. Wow, so it sounds like even with such a simple thing as a credit score, I mean, there's many factors that help build it up. There's many things that can help improve your credit score as well. This is one of the many reasons that I always advise my clients who are thinking about purchasing a home, like once they even start thinking about this, to start talking to a loan consultant, because there are many ways that you can actually build up the score. Because for a lot of the loan programs, there are different credit thresholds. Why don't you tell us a little more about that?
Well, depending upon the type of product, again, I think your loan officer, to be a good loan officer, you really need to point out all the available options a client has for making that one particular purchase. Whether it's an FHA loan or a city program or a straight conventional, 20% down. Then the other thing to factor in is the threshold. So thresholds typically are 700, 720, 740. So if your client's credit score is, 735 or 738, you want your loan officer to help you push it to 740 so you can take advantage of a better interest rate and possibly a different product.
So today we've covered the first step that a loan officer does take when looking at a loan application. And again, that is number one, a consultation. And number two, just looking over your credit history and seeing what different ways are available to help you bump that up so you can get into the best loan programs available. Is that correct?
Exactly.
Great. So the next video we're going to do with Celeste, we're definitely going to talk about the next step in the process, and that's going to be about documentation. So after, the subprime mortgage crisis, a lot of lenders, in those days, you didn't really need any documentation. So we're going to cover in our next video some of the various forms of documentation that we're going to need. And again, I'll keep you updated on the Santa Clara real estate market as time goes on. Feel free to connect with us on our Facebook at facebook.com/Bay Area Connect. Thanks again, and have a great week.